All right, guys, it's Sam here on a Friday, June 8th. And if it's Friday, that means it's Bitcoin Friday. So today, actually, I'm going to do something a little differently. Now, I want to start by telling you that without any hesitation, I can tell all of you, whether you're listening here on YouTube or you're a member or maybe doing a little evaluation through some of the free channels we've made available recently to our Twitter followers, that one of the real joys of this business has been just the caliber, just the quality of people that I've been able to attract to this business. And I'm just so fortunate to have just met along this little journey some incredibly talented people. And I'm going to introduce you to one of them today. Now, he is my partner in the business, and he's our head technician. And he is, without any hesitation, I can tell you, he's one of the best analysts I've ever come across. He's an analyst. He's a trader. He knows how to make money in the markets. And if you've had any engagement with him at all, whether, again, as a member or if you're accessing the free channels within the Discord, you know he's really just a quality guy and a thoughtful analyst, and he cares about you understanding and learning the information that we're trying to teach to you. So if you want to read a little bit more about him, you can, I'm over here on our website, you can just go over to About TDU, and I've got profiles on, I need to update this because we've got, I think, now 6 coaches here, but the key players are here. And if you want to read about Kwon here, you can read a little bit about his background. Now, you know, the thing about Kwon, right? So you see, that's how we affectionately know him as Kwon, KWO. And whenever I hear the word Kwon, I cannot help but think about the Jerry MaGuire movie, right? So I'm assuming most of you have seen that movie, but you remember Cuba Gooding Jr.'s role where he was playing the wide receiver, Rod Tidwell. And he was talking with Jerry MaGuire in the movie, and this is really an impactful part of the movie where he's talking about the Quan. And he's bitching about not getting paid enough, and Jerry been talking about, Jerry Rice, Andre Reed, Chris Carter, all the guys making the big bucks. They have the Quan. And if you remember that scene, what he's describing when he talks about the Quan, he says it means love, respect, community, and dollars and profitability, the entire package, the Quan. Now spelled differently, right? So in Jerry MaGuire, Tidwell spells it Quan, but I can't help but whenever I think of this guy, I just think of the Quan, because he does bring love, respect, community, and profitability and the dollars. He brings the whole package to the membership, and he's just a great guy and one of the best analysts I've ever had the pleasure of working with. So I want to let him take the Bitcoin video today. This is his debut here on our YouTube channel. My members know him well because he's very, very active within the Discord. But I wanted to give him a shot at the Bitcoin video today. He's going to do full history of it, and I think give you some things to think about from both the bullish and the bearish side. And I think you'll find this really time well invested here if you'll watch all the way through it. Now, it's long because he's going through all the history here, but I think that you will find great resources here, great education, a lot of really powerful analysis, and the way he approaches the market is really unique. And he has a very creative approach to wave application and the things that he and I work on together. So without any further ado, I will turn the mic over to the one and only Kwon.
What's up, fellas? It's Kwon and Sons coming to you on 1 hour time delay via YouTube from New York City, the Bitcoin of cities. Today, I'm going to be doing an analysis of the price history of Bitcoin. I think it's important before we talk about the correction that we're in to get some historical context, because we're now far enough along the correction, if we're still correcting, that it's clear that this is not a simple little correction that's going to end quickly. If it hasn't already ended, and it sure as hell looks like it hasn't, we need to figure out when and in which shape it might end, right? And the only way to do that is to look at the historical price record, because we've been doing this now for 6 months, going on 6 months. So that's substantial. That's a big chunk of Bitcoin's lifetime. So what I'm going to be doing is taking the bear side of that cyclical analysis today. We won't be diving into detailed charts of what's going on literally today. That's for forthcoming video, but it's very important work to get through this. And I've got 30 something minutes to cover 7 or 8 years of history. So let's go. Let's get going. Before I talk about the specific counts and measurements, which there'll be plenty of that, I want to note that when you're looking at a cycle level chart, you have to take a different posture as an analyst. The Elliott Wave theory, which anchors our technical analysis at Trade Devils, even allows for guidelines that are specific to cycles. Rightfully, they say that you should be expecting highly extended waves, 3s and 5s, right? It's atypical to find a 5-wave sequence where the 3 and the 5 are extended, but in a cycle, that's the norm. The farther you zoom out, the more the norm that is, and for Bitcoin, we're looking at a chart here of the weekly, which is about as chunky a time frame as you can get for this young asset. You got to consider that. You can't do traditional Elliott Wave analysis on a cycle, I feel, or any kind of technical analysis. You can't pull a fib and expect a 2 to neatly land between 50 and 618. Otherwise, it's not a 2, or a 4 to be like 38 to 50%. That's not how cycles work. If you think about zooming out far enough, and the stock market, which we all know, it's a proxy for the overall sentiment of an entire country, if not the world. A 2 and a 4, they correspond with major recessions and even depressions, like 2008, the housing crisis, right? What was that? A 2 or a 4, right? So there's major retracements that you should expect at the cycle level. Okay, so we will be doing some measurements of this chart in a second, but I just wanted to note that because the measurements are going to be really funky. You're going to get huge extensions and like deep retracements. Okay, so what do you do when you can't really use stuff like that to analyze a chart? Another thing I'll say is at the cycle level, especially for a young asset that's going parabolic, you can't really channel it. A traditional Elliott wave, you take the 2 and the 4, you connect them, there's a trend line, you pull that up in a parallel channel and it should contain the wave. But here, how do you channel a parabola, right? With a parallel line and a pitchfork. It's similar. Yeah, you can do some analysis, but at the subdivision level and at the sub-wave level, it's very difficult to channel something that's moving like this. And a pitchfork really, it's just a channel, guys. Remember, it's a channel with a median line on it, and you're picking the pivots. All right, so it's like the distant cousin or the close cousin of the channel. So a lot of the approaches that we use, you can't really apply to this chart at the cycle level. So we got to go with the right look guideline, which I think is it's a critical guideline for Elliott Wave. So I'm pulling up some oscillators to help my visual anchoring here. At the weekly, you've got, you see what are the important events in this chart. This is one, obviously, big, deep correction. This is another one. It doesn't look that way because it's in log, but it's just as deep, maybe a hair less deep, more than 80% deep, and it's sideways looking and, very long. And then you've got this field of green all the way up here. And then we're starting to see some red. So I'm going to propose to you that what we're seeing here on this chart is, and by the way, this white line here is the literal birth of Bitcoin as a transaction instrument. I think it was the pizza guys on May 20 something of 2010. They enacted commerce with Bitcoin for the first time ever, and so that's this. So this really is the whole price record, right? So when you look at it that way, what are the wave personalities that we should expect out of a chart like this? Because it's so hard to use more quantitative TA. You kind of have to lean a little bit on the subjectivity that's allowed for in TA, right? which at the end of the day is important because a chart is nothing more than a mapping of human emotion, and you know, a human analyzing it is going to gain insights that a computer can't. Okay, so I really consider geometry and the right look as critically important, just as important as figuring out the measurement for a C wave or whatever. So to me, this chart makes a lot of sense, and I'm going to propose to you that this is a 1, okay? This is a 2, this is a 3, this is a 4, and because I've got bear today, I'm going to make the case that this is a 5 and it's in for the first cycle ever for Bitcoin, cycle 1, and we're correcting that whole damn thing, okay? I don't 100% believe that right now, guys, to be honest. This is very, very difficult. From here to here, it's very hard to analyze. Light retracements, highly irregular zigzaggy moves, sideways fuckery. I mean, it's on log it looks parabolic, but let me show you on arithmetic. I mean, how do you analyze this, right? Really, really hard. So we'll do it, and Elliott Wave provides some tools to give you some confidence. But you know, you got to consider whatever view you have, whether this is a 5 or this whole thing's a 3, which I think is a real stretch, but I guess you could call that, or this is a 5 in progress. You know, you got to consider the other side, guys. Okay, that's what this bull bear thing is about. So. Wave personalities. One's the early adopter phase. You know, very little liquidity. Does this chart volume? Let's see. That's not a very reliable volume chart. I actually don't know what this brave new coin thing is. Someone told me this is the whole price record of Bitcoin, and it goes way far back. So that's what I'll be using to chart some of it. But when we get deeper in, I'm going to use Bitstamp, which has the oldest price record of an active exchange, which is why I use it all the time. But anyway, so looking at this, classic 1, early adopter. You got a 0 here. You pull up to the 1, the 2. This looks like part of the 3, all the way to the 3 here. 4, huge move up on the 5. And then a deep, deep correction. It goes from 30, low 30s to like $2. I mean, that's balls deep right there, right? That and looks sharp, as a 2 should. Then you've got what I feel is a classic 3, anchored by my favorite correction of all time, which is the triangle. You know, I have a love affair with this thing because it's the only pattern in Elliott Wave that tells you where the hell you are. You know, there's only so many places that a triangle can be. So when you find one, you got to pay a lot of attention to that. Right. I look at this chart. I look at the significant events. This. I look at the parabolic but jagged three wave geometry here, and then I look at 5 wave actually, if you count the corrections, and then I start looking at the places, the spots in the chart that offer geometrical clues, like this thing, this triangular thing here. This is interesting. You know. But this just sticks out like a sore thumb as a triangle to me. So if that's true, this is a 1, this is a 2, this is 1 of the 3, 2 of the 3, you know, 3 of the 3, 4 of the 3, extended 5 of the 3, which at the cycle level, you should expect a lot of extended 5s, right? Then you got this 4 as a triangle, and then boom, this moonshot to the 5, and then you've got despair and angst and all that stuff for a couple of years, or a year and a half, or whatever it was. So this makes a lot of sense to me as a 1, 2, 3, 4, and then this thing that we'll analyze and spend most of the time on as a 5. Okay, sorry to bore you with this, but I feel this kind of visual analysis for any chart, but in particular for cycles, is critical. So I actually did some quantitative analysis on this thing, like looking at numbers, and like I said, you should expect some really funky projections and retracements because we're dealing at the cycle level. But it looks like I put the genesis date. It's kind of just for historical purposes, but it's not significant. For us, what we care about is when Bitcoin was born as a commercial instrument, and that's May 22nd, 2010. First transaction. So like from here onward is the whole price record really that we care about. I think it was the pizza guys that you hear on May 22nd. So we have a full count, right? I mean, we've got 0 to like, what is this, 17 cents, and then back down to like a penny. That's got to be a 1 and a 2, and then this looks a lot like a 3, a 4, and a 5, right? So the only reason I'm showing these measurements is it's interesting that even at this crazy cyclical level for this super volatile, bullishly inclined coin, I mean historically bullish, you know, Fibonacci plays a role. These projections, these numerical sequences play a role. You know, you've got the proposed 3 of the proposed 1 at 5618, almost to the tick. You know, I don't know that this is a Fibonacci number, but it's just so there's the 1 and the 2, and then you've got this 3. Typically, you'd want to see a 1618 extension on the 1. Obviously, at the cycle level, scrap that, right? But it's still interesting that even though it's 36 times, it's almost exactly 36.18 times the 1, right? And this is the one that really got me is when you're looking at an extension in either the 1 or the 3, the typical way to project the 5 is to look at, even the extended 5s, is to look at its ratio relative to the 0 to the 3. So from the origin of the 1 all the way to the end of the 3. So here, here projected off the end of the 4, which is here, right? Or I think this is the end of the 4. We'll talk about that in a second. But and what do you get? You get not your typical 1618, but you get a 1618 multiplied by a lot. Add a few zeros to it. It's a 1,618% extension of the proposed 5 to end it, is my case, off the 0 to 3. And I mean, yeah, it's not 19.7 thousand or whatever the actual top was, but it on a log scale at the cyclical level, it's basically to the tick, 19.2, right? I thought that was interesting. So let's dive deep into this proposed 5, you know, because I think if we can get a handle on what this is and what it's doing, I think we've got a very good handle on the whole cycle, right? One additional thing before I go and start counting waves is just look at this chart, right? Like, does it make sense to you from a timeline perspective? It's kind of interesting, right? I mean, it's not a core trade devils analysis that we do. I've generally found Fibonacci time sequences not to be as reliable as price sequences, but just from a common sense standpoint, does it make sense to you that one's the shortest in duration but still substantial? The 2 corrects it by about, I don't know, looks like about half the time of the 1 to develop, maybe a third of the time. That makes sense to me, right? Then you've got a 3, which is longer substantially than the 1, but not like crazy long. It's not all the way to here. Some people think this is a 3 from here to here. I don't know about that. That's, you know, from a timeline perspective, it just doesn't feel right. Maybe in a traditional market, but this, again, this is an emerging asset. The wave should be put in much more quickly, right? And then, you know, this is a 3, and this whole thing is a 4, correcting this in approximately the same time ratio as this corrected this. That makes a lot of sense to me. And then this 5 being extended and potentially ongoing or starting a correction makes sense to me. I mean, you can geek out with some of these like Fibonacci time tools. Start here and put it at the end of the 2, and you get, I mean, what do you get? Something illegible, I guess. You get some markings that are interesting, like the 1618 time extension is pretty damn close to the peak of the 3, and you know, the I don't know which extension this is, but some Fibonacci extension hits the end of the 4 to the nose, and the 2618 is damn close to it. I mean, there's a case that this is still part of the corrective structure, although it's got to be some combo then with an orthodox bottom because the price extreme is here. But, you know, there's some case for it. And then you've got the 4618, which is like, I mean, yeah, this is a lot of days. But, again, looking at it in rough justice, it's interesting it lands around here, right? Um, Again, I'm not saying that's anything to hang your hat on, but it's just another data point. You can to analyze. So let's look at. Let me got this zoomed in, I think. Oh. Okay, so here is how I counted this proposed 5. Now we'll talk about this in detail, okay? But I'm gonna give you the high level overview, and then I'm gonna zoom in on some key parts as to why I counted this way. And I propose to you that at least this one, cannot be counted another way. Now it looks like it's a big chunk of chart because we're looking at it in log, but look at it in arithmetic. This one, okay, this I mean, it's basically flat as a freaking pancake, right, for a long ass time, and then it starts to move. So now it makes a lot more sense visually as a 1 and a 3 and a 5, right? But what I'm saying is this thing here cannot be counted any other way than a leading diagonal. That's my case to you today. And you'll see why I say that. As you zoom in, I mean, it's extremely difficult to count this any other way. You could have that diag ending a little sooner, like at a different pivot, but my point is, like, the majority of this thing is diagonal in nature. Its motive, obviously, it's moving up. It went from $166 to 1,300. I mean, that's a big ass move, right? Not as big as this, but from a log perspective, and you can see some of the subdivisions here. It's very jagged. It's indecisive. It's the personality is smack right in the middle of the description of a diag. It's I like to say that a diagonal is the bastard child of an impulse and a triangle. They had a love child illegitimately, and the diag was born. It's a bunch of zigzags strung together, sometimes in double and triple fashion, for every wave, the 1, 2, 3, 4, and the 5. Now you can have there's a flavor of the diag where all the actionary waves are impulses, but I'm telling you, that's not what this is. There's nothing impulsive about this damn thing. You can't count it that way. I mean, what is this? A 1, 2, is this a 3? I mean, it's a new price extreme, but then it's, what the hell is this? 1, 2, 3, back down for the 4. No, that breaks the rule. And then the other thing is, look at this one. This proposed B, it reaches a new price low. Not all the way to the beginning of this A, which is here, but it's a low for this entire piece of chart from here to here. This is many months, guys, weeks that we're talking about. I'm sure analysts are pulling their hair out trying to figure out what the hell this was. And in retrospect, I'm telling you, I think it's part of a diagonal structure. I don't know how else you can count this. If you count it as a motive sequence, like or impulsive sequence, I mean, what is it? 1, 2, 1, 2. No, that breaks the rule because look, price low. So you can't have a 4 that. You can't have a 1, 2, 1, 2, and then another 1, 2 with a new low. That makes no sense. There's really not a different way to count this. Now there's a case to be made that this is still part of the corrective structure from the 4, but it's some jacked up combo pattern that reaches a new orthodox bottom. But okay, then I'll say to you, okay, well, how do you count this? You've got a lot of the same problems. It's very difficult to find clean impulses and 3-wave retracements, and I think it's impossible. So anyway, my case for this being in, we'll talk about in a second, and it does leave the door open for this not being a 5, incidentally, because I count this as a double zigzag, and a 4, if it's going to alternate a sharp 2, which that 2 we showed earlier is damn sharp, and it is a zigzag itself, chances are that it should be a sideways pattern. And it looks sideways, but it's a double zigzag. So anyway, focusing on this proposed 5, I've got this thing as a diagonal coming in a B that's a flat, so A of the B, A, B, C, B of the B, and impulse down for C of the B. So you've got an A here, A, B, C, B, C, B, and then you've got a classic impulse here to put the C in for the 1. This whole thing to me is the 1 of a diag. Then you've got a sharp drop down in a zigzag fashion, almost to the tick 618, which is a big clue that after all this sideways fuckery, if you get a 618 retracement, you might be in a diag. That's a clear tell right there. It's the most common retracement for a 2 and a 4 of a diag. Okay, and then you start the 3. Now, I personally think the triangle is the most important pattern in Elliott Wave theory. It's the only pattern that tells you where you are. There's very few places a triangle can be. It can't be in a 2. It's got to be a 4 if it's alone, or a B wave. It can be in a combo. I mean, it's pretty rare, but no, I shouldn't say rare. That's not true. It's often in a combo. Now, it can show up in a bunch of places within other waves. So as a subwave of a 2, for example, like you could have a zigzag with a triangle in the B, but when it's this damn big, and you guys zoom in and measure it, it is a triangle. When it's this damn big, there's only so many things it could be, right? And so for me, I called this the A. This is clearly a motive, if not impulsive move. The B puts, the triangle puts the B of the zigzag, which is the 3 in. Then up you go for the C, which is, again, clean impulse here. Boom. So you got a 1, 2, 3. Then you got a zigzag, another triangle. Zoom in on that sucker. See, these triangles, man, you got to learn to love them. They really anchor your count. They help you find your place on a chart, man. They're a bitch. It takes forever, and it's indecisive, and it's annoying. But, if you get comfortable with identifying patterns that you can kind of recurringly analyze accurately, that's the way that you're going to get really good at using Elliott waves. So anyway, this is a zigzag. Impulse down, triangle B, impulse down. That is the 4. Bam, right to the 618. I mean, this is looking a lot like a diag now to me. I mean, I don't know how else you count it. This one is a little, it's a little trickier. This 5, the proposed 5, which I have here, because of this move. I mean, this to me is clear. It's an impulse up. This to me is clear. It's a zigzag down. What the hell is this? I mean, we don't have time in this video, but I have counted it, and it is an impulse. Light retracements, but it's an impulse. You got like a 1, a 2, a 3, a 4, and a 5 to put the A in, the B in, the C in. Now, what are the classic measurements that you're expecting to find in a diag? For one thing, this thing's expanding, right? We measured, the 3 can never be the shortest, and we confirmed that here with this little gold measurement. You take the 1 from origin, you pull it down to I think I did it wrong here, to the 2, and what do you get? Well, it's certainly greater than 100%. Let's see, is it close to 1618? That's pretty damn close to 1618, guys, right? What you'd expect. That's a very common relationship in an expanding diagonal. And more importantly than that, it's the wave relationship ratios that matter more than the actual ratio itself. So what I mean is, if the 3 is 1618 of the 1, the classic diag's 5 should be 1618 of the 5. And what the hell do you know? It's, from here to here, the 3, okay? Almost 1618 of the 5, with 618 retracements at the 2 and 4. This is a diag, fellas. It's a diag. So that gives you a huge clue, right? Because now you can explain, wait. Now you can explain this, which, is that corrective? Is that was a big part of the challenge of this chart, right? And I'm proposing to you that's a leading diag. So then the fun begins, because we got a place on our chart here, and this 3 is textbook, This is the cleanest count on the whole structure here from 0 to 20K. It's, you know, even at the cycle level, you know, I know we're on the daily, but we're looking at a very big move here, very big move for quite a long time, multiple weeks here. This measures super clean, right? So this gave me a lot of confidence that this is a 3N. Actually, one comment before against my own conviction that this is a leading diag is, you know, leading diags typically retrace very deeply because they're basically consolidation patterns that are moving upwards or downwards, right? So it's very similar to a triangle, actually, where, you know, volume should start to go down. Let's see what volume is doing, actually. Well, we're on this BLX chart, so this is not right. Let me switch the bit stamp here. 2015. I've got it. Oh man, you know what? I've got this on the 30-minute. If I switch it back, I'm going to lose my place, so I can't do it on this chart. But do I have another one? Yeah, same thing here. Let me just pull up a new one. This is an important point, actually. That's why I'm being anal about this. Let's see what the volume's doing. I bet you it's going down. Sorry, guys. You're going to have to get used to this. I am about as anal as they come. Sometimes a good thing, often a bad thing. But for Elliott Wave counting, I think it's a good thing. 2015. Yeah. Let's see. Log. Well, you've got some spike to put in some pivots here. I mean, this is to end the correction, so that's you know, but you've got, you know, you've got very low volume here. I guess you could call it declining from the 1 to the proposed 5, right? Certainly declining. Again, this exchange is one exchange. I don't know what the whole volume of all the exchanges combined looks like, but I bet you it declines like this. So this is the 4 that ended, the cycle level, or primary level 4. This is the beginning of the diag, puts the 1 in, big volume, spikes up, and you know, there's some spikes here to put in each pivot, but that's what you expect. All right, so back to the chart. So the only thing that isn't textbook is this. You expect a deep retracement. You only get a 382. I mean, it's to the tick. So you got to use some context here, right? I mean, you're not ever going to nail every guideline and rule. That's not how Elliott Wave works. A lot of this is subjective analysis, right? Now you got to be as objective as possible in your subjective analysis, but you know, does this make sense that it retraces lightly? Well, to me, it sure as hell does. I mean, look at what happened. You have, what is it, 2014 to 2017. You got 3 years of sideways fuckery, guys. I mean, the consolidation's already happened. The diag was icing on the cake. It was just, I mean, the consolidation happened. The bulls won. There's a breakout here. Starts this 3. This is a very aggressive, impressive 3. It makes sense to me that this is light, despite the guidelines, and then you start a big-ass bullish move, moonshot, right? You go parabolic. You go from $880 to I mean, man, that's right. And the waves measure super clean. It's easy to count too. It looks kind of funky here. 3 looks the shortest because we're in log, but I guarantee you it's not. I'll measure it, you know. So you go from the 1 to the 2. The 3 is almost 1618. Now remember, it's almost 1618 of a huge bull move. So this is a very credible 3. Even it missed it by a hair, but you know, very credible 3. It's already at $5,300 from a, you know, whatever it was, $880 or something. More importantly, you've got an alternating corrective pattern here. You got a zigzag. This is a zigzag to me. You're like, how the hell is that a zigzag? Well, let me show you. Okay. My favorite pattern, the triangle, right? It's an A, a motive A, I don't know if it's an impulse or not. It's hard to tell with this thing, but certainly motive is straight down. Got this triangle here as a B. Very common to see a triangle in the B of a zigzag. Can't be a B of a flat, but it can be a B of a zigzag. And look at that. A, B, C, D, E. What's volume doing? Yeah, look at that. A, B, C, D, E. Volume's declining throughout the triangle, and then you got the thrust, right? So you've got a sharp 2, and you got a sideways 4. Textbook. Guideline of alternation. How's this sideways? Looks down. Sideways refers to, it's just a family of corrections. You can have a very deep flat correction. It's just the wave shape. This is 335. Very clear. ABC down, ABC up, you know. And then you got this big impulse move. All right. So that's the 4. And then the 5 projects, let's see, within the wave. What does it project? So 0 to 3, like I said. 0 to 3 off the 4. What do we get? Pretty damn close to 100% of the move from 0 to 3. What did I say the highest probability was? 618 to 100, right? Second highest, 1618. Doesn't quite make it to 1618, but man, this was a big ass move. This is still an extended wave to be over 100% of this entire move, right? Look at it in arithmetic. It's impressive. It's got balls. That's a 5 right there. And by the way, once the 5 gets put in, what do you get? What is that thing right there? It's another flat correction. Harder to see in daily, but I'm telling you, it's ABC. It's an expanded flat, right? Here's ABC, ABC up, and then down. Why is that important? Well, again, guideline of alternation. We had a sharp 2 here. I have it as a zigzag with an ending diagonal C. We got a flat 4. Right? Now we're starting to make some sense of this crazy ass chart. You know, and the 3 projects almost to the T, to the dot, to the tick, 561.8 of the 1 off the 2, measured off the 2, right? You're starting to get conviction. This is a 3. To me, this is a 3, and this is a 1. So what the hell is this? Right? This is the one that, this one to me, man. If you could figure this wave out, you're something as far as an Elliottian. It's hard. It could be a lot of things, to be honest. The first thing I thought of before I saw this, the entire price record was I thought of this as a completed impulse here, not here, and I had this corrective pattern starting with a flat correction, an expanded flat. So ABC down, ABC up, and it measures 1618. So not, you know, super textbook in terms of like around 130%, but 1618 is very common for an expanded flat. A, B, and then C measured quite well too. It was a substantial extension of the A, like 2618 or something. Pretty sure it was, right? So I had the correction starting this as a flat, then an X wave here, a zigzag, and I thought, hey, we're done, man. You know, flat, zigzag X, zigzag, that's by far the most common double 3, which double 3s are quite common. So I was thinking, oh man, you know, we're done. And then buying, and oh man, McAfee's getting excited again. His ball might be saved, and then we get this. Right? This is when I started thinking, man, you know, this might be a couple of years. Because if that's not it right here, it's just taken too long for it to be anything else than something very substantial, right? And this is looking, this could be an X, if in my theory of this being a flat and a zigzag, right? And what are we putting a triangle in? That would be a bullish thing, right? We will talk about that count where this is a flat, a zigzag, and a zigzag, which is very common, like I said. Then there's an X wave with a truncated C here, okay? There's a little truncation here, which I hate, but it is what it is. And then you have us putting in a triangle or some kind of like sideways pattern here, but the low is in at the 5.9K here. Remember, in a combination, the low doesn't have to end with the correction, right? We'll put an orthodox bottom somewhere around here, like maybe a triangle A, B, C, D, E, or another weird sideways pattern, right? Anyway, that's for another video. But I've since rethought my position. I no longer think this is, the top. I now think that the top is the top right here. And what I think this is an ending diagonal. This is certainly debatable, and it's this type of wave can be analyzed a lot of different ways. You take 10 guys who've been doing Elliott Wave for a while and are good at it, and you'll get 10 different answers, right? No easy way to measure this thing. It's just ugly, right? But for me, the fact that it was ugly was significant, because ugliness to me means there's indecision in it. There's excuse my language, but sideways fuckery, like I like to call it. When I see that, and it's not as clean as this 3 that we measured, I mean, it was textbook, right? Then to me, it's suspect as an impulse. Then it's like, okay, well, might be in a diag, or might be a corrective pattern of some sort. It could be like, the beginning of an impulse, but in a very diagonal way, right? But I mean, you can't have this be the beginning of an impulse. I mean, this 5 already it goes from 5.6K to like 20K. I mean, this has got to be it, right? I mean, what are you going to get? This to this, and then up here again? No. Yeah. So let's analyze this here. And this is controversial. Call it an ending diag, but to me, it makes a lot of sense. It fits the story of the picture, which again for me is a huge deal, right? You've got indecision, leading diag, protracted. It's almost like an extension of the 4 is the leading diag, right? And then you've got this hugely impressive 3, which is textbook. But now we're at like sniffing 10K. McAfee's talking about his gonads, and then you got pretty acceptably deep 4, from like 7, almost 8K to almost 6K, or below 6K, I should say. And then you've got this moonshot. And so this moonshot to me, what is an ending diag? An ending diag is something that happens when a move has gone too far. It's too damn aggressive. It needs to slow the hell down, right? It's a bearish sign. Now, while it's being put in, it could be super bullish, because diagonal can travel a lot of price in a short amount of time even. But how they end and the shape that they take as they end is one of the telltale signs in Elliott Wave theory that run for the hills. Get out, short if you're so inclined, hedge, right? And we did get that here, guys. I mean, remember how this move was, right? It was irregular. It was like the guys who were just, buying BTFD, right? They got wrecked. They didn't recognize that this really parabolic move here was way slowing down by the time it got to around here. Okay, so let's analyze this 5. That's what this is. Let me take out the markings. Actually, I think I have another chart with, yeah. So here we go. So this is what I do, again, when I look at a chart, I just stare at it. I'm like, what can I deduce from this thing? Let's take off the markings. From here to here, what is this? I'm not trying to count any waves yet. I'm just looking for geometry. Well, the first thing that sticks out like a sore thumb to me is the cone shape of this thing, this wedge-like shape here, right? This, from here to here and here to here, it makes a wedge. The other thing that sticks out to me is this thing channels really well, right? It could be all one wave. It travels, if I drew a channel here, it travels well, and there's this boof, this big throw over to end it, and then big correction, right? So that gave me a clue. The other clue I had, which is the reason why I counted this as a expanded flat to start the correction before, like I was saying, was this to me is 3-wave, guys. I mean, I know you can count it as 5-wave, like 1, 2, 3, 4, jacked up 5 here somehow. I think it's suspect as hell, but you could, in theory you can count it, but does it have the right look? Does this look 3-wave to you or 5-wave to you? If I polled people on the street, what would they say? It's 3-wave. So, well, if it's 3-wave, then what the hell is it 3-wave part? What's a 3-wave doing in a moonshot from 5K to 20K? Could be a diag, right? So let's put the markings back on. So to kind of find my place, I started looking at other patterns that might give me clues. You know, this is a triangle here, triangle here, triangle here, diagonal here, triangle here. As you can see, this stuff happens a lot in crypto. It's not all happening at the same degree, mind you, right? But, you know, you gotta get familiar with these patterns. I mean, that's one of the things we reinforce at Trade Devils is this is where the rules are good, right? Is when you see something that looks like something else, how do you decide if it is or isn't? Well, there's high probability rule sets and guidelines we apply to give us confidence that this is what it is, right? I guess for now you're going to have to trust me, but yeah, I spent a lot of time on this move. And the way I labeled it was like this. So remember, this is the impressive kind of well-channeled move. This is impulsive to me, right? I have this as 1, 2, 3, 4 with a long 5, but yeah, the 5 is suspect is long, but not really. I mean, this thing is one move, guys. I mean, it looks like a straight line with a bunch of lumps thrown in there. And this triangle anchors it as a 4, and it's a really short one, right? So in order for this to be anything else, it would have to be 1, 2, 1, 2. Right, because this overlaps the peak of this one. If you look at it, sorry, I'm looking at the smaller time frames on this macro chart. What I'm saying is, if this is 1 and a 2, this can't be a 1 and a 2 or a 3 and a 4. And if it's a 1 and a 2, then what the hell, you know, 1, 2, and where's the 3? It's hard to find your place. So the way I have it is 1, 2, 3, the triangle 4, but this is not the. It's no overlap because, you know, the orthodox bottom of the triangle is above the 1 here, right here. See? No overlap. No rule violations. 1, 2, 3, 4, 5. This 5 is extended, but, you know, look at how well it channels. It looks almost like a straight line up. And then you've got a meaningful correction, a flat correction, A, B, C down. Yeah, it's light, 23.6%, but again, context. This is the moonshot. Remember, guys, this is when, like, McAfee was saying things. He saw the 236. He's like, that's it? 500K, Bitcoin, 2020. All right, so I've got that as a 1, 2. But because the 2 was light, this is part of the story of Elliott Wave theory, right? Because the 2 was light, it didn't fully consolidate the move from here to here. So you start with a diag, consolidation, 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 right? Then you get a zigzag, A, triangle B, down C to correct that. And then you start, that's the 1 of the 2 of the 3. Then you go up here 3, 4. Boom, big 3. You come down a zigzag for the 4. Okay, this is where the diag begins. So far it's a clean count. 1, 2, 3, 4. Okay, you've got alternation. 2 is a flat. 4 is a zigzag. No rule says you can't reverse the probabilities, right? Yeah, the 2 is most likely a zigzag, but it's often a flat too. And if it is, then you've got the 4 alternating here. So I'm pretty confident I'm counting this correctly. 1, 2, 3, 4. So that part I'm cool with. This is the part that's a bear. That's a monster, right? So on this count, once again, I zoomed in on this chart, looked at all the different things that geometrically that I could deduce. And I mean, this cone shape here is very obvious, right? This is looking pretty cone shapey too. And this is a triangle. It does measure well. It's a short E, but you can have an undershot of the E all day long. All happens a lot. This is a triangle, right? So I start anchoring my count with these little patterns. And this is what I came up with. Did I mark it? Actually, no, I don't have it marked. So maybe we'll mark it real time here. Oh, you know what? I measured it is what I did. So this is a contracting diagonal triangle. Okay, we measured an expanding one. It was measured textbook. Well, the reverses of that is how you measure a contracting one. The waves should have relationships related to by some kind of Fibonacci, common Fibonacci ratio, right? So I've got this as A, triangle B, impulse C, 1, impulse A, running triangle B, impulse C, that's the 2, 1, 2, okay, 3, 4, and then overthrow on the 5, classic overthrow. Is 3 the shortest? Well, obviously 1's the longest, so I'm not even going to measure that, but no, 3 is not the shortest. Look at this. From here to here to here, this is the 3 and the 4. 5 misses it. Not quite 618, but again, in a contracting diag, it's very common to find an overthrow or an underthrow. It's the only diagonal structure that can fail. You can't fail in an expanding one, right? So this is an overthrow, but it doesn't reach 100%. But here's something significant: is what is the 3 related to the 1? 618. Look at that, right there. From here to here, the 1, the 2, the 3 is 618. You got the wedge shape, you got the wave ratios, you got the story of why it fits, ending diag. And what happens after an extended wave or an ending diag? Especially, if the two are combined, you get disaster, guys. That's about as bearish a sign as there is in Elliott Wave theory. You get 20K to 5.9K. That's what you get. Okay, so I'm going to stop the video here because I've run quite long. I hope you guys found this somewhat informative. I look forward to doing a lot of these, and we'll be analyzing, much smaller tradable time frames, but I thought this was important context for today. You've got my theory as to why this thing is a completed cycle now, with a full detailed web count of the 5, and maybe next week if I get bear again, I'll tell you what I think will happen going on downward. But let me say this, okay? No matter which team you're on, bull or bear, you got to acknowledge this correction is far from over. I mean, far meaning like it's not ending today. When moon? Not soon. Feeling like a pontoon? About to face a monsoon? Well, don't run for the hills. Work on your skills. Come to TradeDevils.com. We'll show you how. All right, guys. Talk to you next week.